Hi, I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago. Well, today was a feel-good market, the first feel-good market we've had in a while that pushed most vols and most asset classes lower. Looking at VIX futures, you had oil vol down about 2%, gold vol down about 4%, equity vol down a stunning 8%. All the while, FX and rate vol basically unchanged, but don't get carried away. Keep in mind, FX and rate vol had some leakage over the last 48 hours that the other asset classes did not. But let's get to specifics. Copper. Right now, copper 3-month vol at 24%, and it's been there for quite a long time. Even though copper today basically outperformed in the base metals, it still lagged the tape, but traders are wondering when, if ever, that will change. Gold's an interesting story. It's a continuing narrative that paper continues to buy March and June $1,780 through $1,800 calls. Keep in mind also, something that's very, very interesting in all metals is that funds seem to be rolling their positions between NOV and DEES out to March and June about 3 weeks earlier. So we're seeing some variations in term structure. On the foreign currencies, the theme has not changed. Paper continues to sell premium in just about every currency. Focusing today on the Aussie dollar, we saw a customer sell 3,600 of the DEES 99-100 put spreads. They traded at 21 ticks, tied to futures at 103.70. Also, customer buys back short DEES 99 puts, sells January 99 spot half puts, did that for 21 ticks, tied to 103.70. Beyond that, in the euro currency, paper sold DEES Jan March 120 put butterfly, the time butterflies. They're selling DEES in March, buying January. They sold that about 1,000 times. The price was unclear, but they are selling volatility. Really interesting to see that vols across the board did go lower. S&P vol actually was lower, but one thing to keep in mind right now is that implied volatility right now in the S&P is about an 18th percentile as judged over the last 5 years. Skew definitely was lower today, but it was much lower in the further out months, 6 months, year, even year and a half. Near-term skew actually rose on the day as volatilities in that area got very, very cheap. I'm Larry Shover, Chief Investment Officer of SFG Alternatives, reporting to you from the CME Group in Chicago.